Well, staying with closing bell and some results that have been released today, we pick up on Old Mutual's first half numbers. And on the line, we're joined by the CEO, Julian Roberts, of that firm to unpack the numbers for us further. Julian, such a pleasure to have you with us today. Just a quick overview of your numbers. It does seem as though currency swings, which we just touched on with our previous guest, have definitely had an impact on your earnings.
Yes, certainly currency and the weaker rand that one had between 2013 and 14 did have an impact. But for the last few years, to allow our shareholders to really understand the results, we normally talk about constant currency. And if you strip out the impact of the weakening rand, we had extremely good results, up 16%.
You have really focused on the US, the UK, as well as Africa as your key growth areas. But which of these three regions is looking the most optimistic?
I think the UK probably has the fastest growth moving forward, and that's purely because we've been building the business. I put out a target of £270 million profit for the end of 2015. We delivered 225 million. The business that we've got and that we are creating is really in the sweet spot for retirement savings for people in the UK. There's been so much regulatory change, plus the impact on traditional insurers of low interest rates means that customers have to take more responsibility for their savings. And I believe our business model is absolutely right. So the acquisitions we made during the year, together with the growth that we have, put us in a pretty good position.
I want us to touch on this new opportunity presented there, because surely competition must be fairly tough. We see the likes of Discovery also moving into that region, although it's in the health market. But what's different about your product offering for this more developed economy?
How can I say this very quickly? It's partly IT related. It is partly the fact that we have tools and solutions that make it easy for individuals to choose and allocate their funds. Insurers in the past have been very much hooked into long-term guaranteed type savings, and consumers aren't buying those things anymore. So the big mix, if you like, is from deferred benefit contributions, where the employer looked after retirement savings, to defined contribution, where people have to look after their own investments. And so therefore there are a number of players like Old Mutual that are growing very, very fast in the UK. One could argue at the expense of the traditional insurers.
Julian, if we move our attention now onto the US market, we are seeing consistently positive economic data from that particular region. Are you hoping to tap into this particular opportunity?
Yes, I'm delighted with the growth that we've had in the US. Profit increased by 32%. Our net client cash flow, i.e. the new money we had less the money going out, was over $9 billion. The business certainly hasn't been affected by the IPO and the work that had to go in. So very good performance in what is the fastest growing economy in the world. So we're well positioned there as well.
Let's come home to Africa now, where you've been very bullish on your expansion projects here across the continent, as well as your recent acquisition in the East. But what about the West? There's no particular mention of the western part of the continent in your results today.
No, Ghana and Nigeria, and there are two focuses, are both very small. Because they're very small, we didn't particularly talk about the fact that we've doubled sales in 2014 over 2013. But with a group the size that we are, they don't make a significant contribution. We're very pleased with the rollout of product in Ghana. We're pleased with the bank assurance relationship with EcoBank, and so therefore we're growing quite well. Nigeria, we are still a minnow. We will take our time to continue to look for acquisitions to bulk up, but we're not in any particular rush.
Indeed. Julian, thank you so much for your time today.